Hey everyone, this is Kirk here again at OptionAlpha.com. Hopefully you guys are having a great weekend. Wanted to send out this video update for the two trades that we had on Friday, June 6th of last week. So we had one opening and one closing trade. And like we do every night on these video tutorials, we're going to go over both of these trades in detail so you guys understand exactly why we made the trade, where we placed our positions, etc. And in particular, we're going to go over the calendar in Intel in a little bit more depth because it's obviously the only opening trade we have, so we have a little bit more time on our side here. So let's first start out with the closing trade. This is WFM, which is Whole Foods. Now this was originally an earnings trade that we had made in Whole Foods, and what happened is that Whole Foods gapped considerably lower. So if you go back a long time in some of the video tutorials we've done, we originally had an iron condor position that we had entered in Whole Foods. And as Whole Foods gapped lower after earnings, we did see that volatility crush. That was great. But what we didn't see was actually the move in the stock that we needed. So it gapped lower. We ended up closing out our call side for a 5-cent debit. So basically closing that out at practically nothing. And then have held on to this put side for quite a long time. And it's been the June 45.40 put spread that we've held on to. So with the credit that we received originally, it puts our break-even price right around $43 or so. So we still needed Whole Foods to rally significantly, but we've held on to this position where a lot of people that I know of have gotten out of this trade at basically a full loss. And today we ended up closing out the trade at a 372 debit. So this trade can actually go to a $5 debit. So we saved about $125 by not doing that, by not closing it out at a full loss and kind of just waiting till the market gave us an opportunity to close out early. Now, we only had two of these spreads, so we did take a nice loss on these and we only had two. We could have absolutely closed out just half of this position, and I'll show you the chart here in a little bit, and then let the other half of the position ride, but we only had two, so there's really nothing to close out. If I had 4 or 5 of these, in this case, I might have closed out half of the position and let the other half of the position kind of ride since Whole Foods is rallying here just a little bit. But I also didn't want to miss an opportunity to take this trade off with a little bit less of a loss than we had originally planned for. So here's a chart of Whole Foods so you guys can see what we're talking about here. So, and you notice that this is the day that we actually made that earnings trade. Now our trade above the market, so up here I think we traded the 55.60 call spread above the market. That was fine. But you can see that our first strike at 45 is right about here. So Whole Foods made a huge move. And again, not that anybody saw this coming, it's just the type of move that it made. But it basically sat down here in this range right around 37 to 39 for the better part of a month. And so we did have to just kind of let this thing sit on our books for a little bit. It looked like it had a full loss, but it was only a paper loss at that point until just recently when Whole Foods started to rally. So again, you can see why I said earlier is that if I had more of these spreads, I might have taken off half just to see if possibly we get a nice big rally for some godforsaken chance up until around 45. I don't think that's going to happen, but if we did, I'd like to have some of that position still back on there. But since we only had 2 contracts or 2 spreads that we sold, I felt that it was at least time to at least get rid of those and take the profit, or at least the less loss that we had, not a profit, but the less loss that we had and that opportunity that the market gave us. So that's what we did today, is take that trade off. Again, the whole market was rallying higher, so it was very easy to get out of that trade. All right, so let's talk about the calendar in Intel. So as you notice, we've been doing a lot of calendars, a lot of diagonals, and that's just because the market has such low implied volatility right now. If we actually just take a look here at the VIX, you guys will see that the VIX implied volatility is crazy low. I think it's down under 11 for sure, if my chart would load up here. Yeah, and you can see that just yesterday on Friday how low the VIX got. So it's gotten under 11, and you can see the level of complacency in the market is pretty much unmatched for about the last 2.5 years. So we haven't seen this type of calmness in the market in a very long time. Now that doesn't necessarily mean that things are going to go crazy, but that also kind of raises a red flag, just generally speaking, for where equities are, that there's this level of complacency in the market that could be a signal that the market is starting to reach a pinnacle point, at least short term. So we could see a turnaround short term. But whatever the case is, we know that the VIX is crazy low. There's practically no trades out there that are new trades to enter that have high implied volatility. We're not during earnings season just yet. So there's really a lot of few options out there to keep yourself busy and active, except for basically debit spreads and some calendars or diagonals. So that's what we've been focusing a lot of our attention on, is calendars and diagonals. Going back to the Intel trade, we have the Intel calendar here that we entered, and this is a July-August calendar, so we're even starting to go out into the August realm here, and that's basically just because we got really good pricing on this. But for the July-August, we went ahead and bought the 29 calendar and paid a 9-cent debit for it. So it's a very cheap trade for us. It has a very good potential to make some money, and you'll notice that we're actually a little bit bullish on Intel going up to the 29 strike for July. So assuming that Intel continues to rise through June and through July, and basically saying, you know what, if this market is so complacent, it can stay complacent longer than a lot of people can stay liquid if they're shorting the market. So we obviously don't want to just try to pick the top here. So if the market is going to run, we need to have some positions that are going to take advantage of that run higher, and Intel might be one of those stocks. So if we go to the chart here of Intel, you guys can take a look at it. You see that Intel has had a huge run up in the last couple weeks, and notice that still 29 is still a little bit of a reach for it. So we do think that at least at some point the stock is going to have at least kind of, tapering off. It's not going to rally at the same rate, but that's what we'd like to see. We'd like to see Intel make this type of trajectory going up till July expiration here and kind of settle right around 29. Now we could have easily done the 28s. 28s were very cheap as well. They were pricing very well and very active on Friday, but you'll notice that that's exactly where the stock is. So we're not giving it any upside potential, and we could potentially lose if the stock rallies too high, too far, and too fast. If we actually go to the trade tab, I want to show you guys where our position is for this calendar, because sometimes it can be a little bit confusing, so we want to kind of clear all that up. Now remember, a calendar is that you're going out in different calendar months, but you're still trading the exact same strike price in each calendar month. Now what we did here is we went ahead and shorted the July 29 calls. So you see we're short these options, and that's that red position symbol here. And we're basically looking to get around 32 cents on this trade. So that's really kind of what we expect. Now you'll notice that the August 29 calls are trading at a little bit over that price. So there's not a huge price difference in these right now. And again, because implied volatility is so low, but we went ahead and went long the back options, which are the August options. So we're trading those options at 68 days and basically shorting the July options at 40 days. Now, with a calendar, we always want to focus on that front month, right? That's when we likely will end up rolling the trade off or closing it out, whatever the case is. So that's really our days that we're focusing on. Even though we're trading the August options, which are 68 days till expiration, that's not really our focus. Our focus is more on the July expiration. So that's really our timeline in the sand, if you will. If I go to the Analyze tab so you guys can see this trade here, and as long as my computer will continue to move up with me, perfect. So this is what the calendar looks like, very similar to what we've talked about before, this kind of peak in the price. But you'll notice that by even moving out to the 29 options, which are right here, we still are in a range right now where we could make some money on this trade if Intel does nothing but move sideways between now and July expiration. Now, obviously, we've left ourselves a little bit more room to the top side and basically all the way until a little over $30 in stock price. So we've even given ourselves a little bit more room to be right in this trade. But you'll notice what's really good about this calendar is that it has really low downside risk. So our risk is only the $9 credit that we received on each contract. But you can see we can make about $200 on this spread if it were to close right at 29. So I'm targeting right around $50 to $100. That's ideally where I'd like to make some money on this trade and have a huge return on investment for the $9 credit that we put in there. But we'll see what actually happens. But again, this is just a trade to stay active in the market. If the market's going to continue to stay high and implied volatility stay low, we want trades that are going to trade in that direction. So take advantage of the market moving higher. We obviously don't want to kind of buck the trend and just do everything short against the market here. So that's really kind of a review of where our trades are right now, and definitely an in-depth review of the Intel calendar trade. As always, if you guys have any comments or questions, I'd love to hear them. Ask them right below this video or in the membership area of OptionAlpha.com. I'll get back to all of those tonight or tomorrow before the open, and happy trading.